Hey guys, welcome back to the channel. So, we've talked about, financial planning, financial planners, and all that stuff. And, really we haven't talked about, how to, make your own financial plan, right? Or should you even make your financial plan? If you've already watched the other videos and like, okay, you're like, I need to make a financial plan. I need to get a, some sort of plan together, right? We're going to kind of go over like how to do that and stuff right there, right? Because honestly, you could go and get a financial planner, right? Because a financial planner is basically like a guide and a coach, right? Some people need that, some people don't, right? So we're gonna talk about how to make a financial plan without using a financial planner, which of course, that means without all the fees and all the other stuff, right? Because hiring a financial planner is like working with a nutritionist or a personal coach, right? They can serve as a guide and a coach, point you in the right direction, encourage you to get there. And for some people, that's really good for them, right? That's invaluable, right? It's just, they really need it. But not everyone with a six pack has a nutritionist. Not everyone with, huge muscles has a personal trainer, right? Working with a guru or, someone who knows what they're doing, it can be helpful. But you can get there on your own, right? So when it comes to managing your finances, the money you spend on a financial advisor could be better spent on your investments, right? Assuming you know how to properly invest, right? So making a bulletproof financial plan without assistance hinges on whether or not you can make shrewd and responsible decisions on your own. So if you're looking to fly solo, that's what we're gonna go over today, right? So one of the first things we need to talk about is determining your goals. The first thing any planner will ask about is your goals. What do you want to do with your money now and in the future? Do you want to start your own business, retire early, maybe take a year off to travel? Identifying your goals first is crucial because that will determine your next step, right? Or your next steps, plural, right? Like a bunch of your next steps. If your goal is to retire early, then your action items will be different from someone whose goal is to start a family as soon as possible. If you've never thought about it, I suggest starting. Forcing yourself to develop goals will help you to better understand what you want out of life and how your finances can help you get there. You'll likely have both short term and long term goals. A short term goal might be to move to a nicer apartment, a long term goal might be to buy your own house. Right? Make a list of both types of goals and rank them accordingly. Look at your assets, your liabilities, your cash flow, right? Because you need to get a holistic look at your finances, right? You'll need to compile a list of your assets and liabilities to do that. So, assets are, what you own, including physical items like your house, car, any collectibles. Assets also include the cash you have in your checking, savings, and retirement accounts. Your liabilities, that's going to be your debts, your mortgage, student loans, auto loans, and outstanding credit card balance. Once you have a list of both assets and liabilities, subtract the liabilities from the assets to come up with your net worth. It's not uncommon, for younger people to have a negative net worth, especially if they're dealing with costly student loans, right? So another thing we're going to have to talk about is going to be your cash flow, right? Because once you have your net worth, that's the next thing to look at, right? Cash flow, which is basically going to be how much you spend versus how much you earn. So go through your bank account and credit card statements, say, an app or a spreadsheet or something. You can probably use like Mint and compare your monthly outlay to your net income, right? If you're spending less than you earn, that's good. You're on your way to saving money and creating a stable financial plan. Most people will discover they're spending more than they thought and will need to make a couple changes. So you're going to look at those expenses carefully and you need to analyze each one. Do you really need Hulu, Netflix, HBO subscription, right? Is your monthly pedicure a necessity or can you cut back to once every other month, once every 3 months, right? Slashing your budget is a painful and arduous task, right? But Just like dieting or starting an exercise regimen, it's good for you. Uh, and honestly, this is the time to remember your long term goals, right? And why you're making these sacrifices in the first place. It's easy to give up Taco Tuesday with friends if you're saving, say, for your a bucket list item. Say you want to go to Greece, go to Australia, go to Japan, right? Or maybe you want to buy your dream house or your first house. Like who knows, right? You got to keep these things in mind. All right, so now we're going to get to actually creating an investment plan. Consumers often hire financial planners to help create an investing strategy for retirement, but with robo advisors and stuff like that, anyone can really start investing by themselves. So let's talk about robo advisors for a minute, because some people might not know what that is. A robo advisor is a digital software platform that creates investment portfolios with a simple algorithm. When you sign up, the robo advisor will ask about your age, risk tolerance, current retirement savings, and desired age of retirement. Then they determine what you should be investing in and exactly how much you should save every month. Okay, of course, you could hire a financial planner to create a unique and specialized plan. It might cost you hundreds of dollars. A robo advisor is going to do almost the same thing for way less. Right? With a reputable robo advisor, say like Wealthfront, you can choose from recommended pre-crafted investment portfolios, or you can create a personalized portfolio. All you have to do is choose from popular ETFs in the categories of healthcare, technology, or clean energy. Then the rest is up to your robo advisor. In addition to rebalancing your portfolio and reinvesting dividends, Wealthfront also uses a tax loss harvesting strategy in an effort to lower the taxes you pay as you invest. So be aware, though, that you can only use a robo advisor if you have an IRA, right? An individual retirement account. If you have a 401k or 403b through work, your company will have a list of funds you can choose from. If possible, I'd say, maybe try to pick a target date fund from a company like Vanguard, T. Rowe Price, Charles Schwab, something like that. Well, let's talk about target date funds, right? We just mentioned that. They're kind of a set it and forget it system of investing, right? You pick a target date fund with a date close to your retirement goal, choose how much to invest every month, and step aside. The fund will reallocate itself as it gets closer and closer to the target date, so you don't have to check on it regularly, right? Well, we're talking about not using an advisor. Well, what if you do need an advisor? Well, when would you need an advisor, right? Well, typically, people don't need a financial planner unless they're unable to manage their investments by themselves. Or maybe you have unique circumstances. If you inherit $200,000 after a family member's death, for instance, a financial planner can show you how to invest the money and make it last for decades to come. You can find, reputable financial planner through the National Association of Personal Financial Advisors, or the XY Planning Network, which is aimed at, millennials, Gen Xers, the younger generations, right? Before you choose one, you should have a brief introductory call to ask them about their work and how they charge clients. You want to stick with fee-only planners who charge in, like an hourly or monthly basis instead of a percentage of your total earnings. Find an advisor who has a fiduciary duty to you, right? Which means they can't recommend products they earn a commission on, right? So, let's kind of go over all this, right? Because hiring a financial planner, like we said earlier, it's like working, with a personal trainer or anything like that, right? You still got to do the work. They can point you in the right direction, but you still got to do the work, right? They're going to serve as a guide, right, and a coach, pointing you in the right direction, trying to give you words of encouragement to get there. But, you still got to do the work. And for some people, that's really useful. And for some people like me, I'd rather do it myself. Now, you can take that however you want. Maybe you think, okay, like, I can't, I don't, I have all these numbers, it's too much I'd rather someone take care of it for me. That's perfectly okay. There's no, this is way better than this way. Just, there's different things for different people. All right. So hopefully you guys got some good information out of this video and you can decide what you want to do. If you haven't already, please go ahead and subscribe to the channel, like the video, and until I see you guys in the next one, y'all be safe.